Considering that the elections are still not out of the way and that we have taken a defensive stance when it comes to trading with Bitcoin during these days, some people are asking me about the setup I share in the morning. We're talking about this breakout on the 4-hour. Some are starting to get a little bit itchy and fear that we might miss the train. Price has managed to recover above the resistance of 68.8 after all, and it even pinched above 70k for a couple of candles of the 4-hour time frame. I want to give an update on how are things looking with this move in the price. I'll cover the daily time frame as well. I also have a little bit of a scary news in here that I want to cover from the Big Well Explorer. Some smells of distribution are coming into this indicator, and I want to give you my take on that as well. I'll cover the levels of liquidity in the scalping and in the swing trade template to stay up to date with what is currently attracting most the price. And of course, we're going to look into the deltas of longs and shorts, and stay until the very end of the video because I've got some new developments both on the balance sheet of the Federal Reserve and on the dollar index. Both of them are pretty juicy, early indications. Make sure you don't miss that one. Guys, if you like this type of content, make sure that you're subscribed both to the Trading Parrot channel and the Coin Bureau Trading, where I publish 3 videos per week. If you really want to stay on top of Bitcoin, having both channels are gonna give you the total coverage of Bitcoin with 2 videos per day about Bitcoin, plus videos on altcoins and tutorials. And considering that elections are still not out of the way and we are for a 3rd week producing green candles above the breakout area, that is something quite promising at the moment, we have to admit. And I love so much this pattern, which I call the megaphone pattern. It is not just artistic and heart-touching to see this breaking out after so many months, that I felt the need to dedicate a song to it. Yes, as I promised guys, I recorded Can't Take My Eyes Off You from Frankie Valli, which you can currently listen from my channel, and share those deep feelings for Bitcoin as well, if that's something you think you might enjoy. Since our last video on Coin Bureau Trading, a very quick reminder that we managed to hit 67.2, which was our target, coming from the confluence of liquidity pools located there with the CME gap. Some people in the comments were asking what are CME gaps, and to be fair, I don't have a tutorial for that, but I tend to explain them in most of my videos, so I'm gonna give you a very quick explanation. CME is the Chicago Exchange, which doesn't trade 24/7 like Bitcoin does. It closes on weekends and during the evenings. During those periods, Bitcoin continues to trade, generating an imbalance between that exchange and the rest of the market. For example, this weekend the price closed on Friday at 67k, and on Monday it was opening at 68.2. All the liquidity from that exchange, all those orders, ended up creating a vacuum that generates liquidity that tends to attract the price back to close the gap. That is the shortest explanation I can share. Now let's go into the 4-hour time frame and let's look at what's going on. In yesterday's video, we noticed that the RSI 4-hour was breaking out above this trend line and we were calling for another fake out. It was too early, we were before the elections, and just like we've been having before so many fake outs, seeing an increased amount of volatility, we expected this to not become the actual breakout, and you can see how it came back down 3%, putting a new low. Indeed, it went back inside the previous range, which makes it a quite disappointing breakout. But indeed, after that, and thanks to that move, it managed to print a hidden bullish divergence, which in the video this morning, we were saying that is forming a W pattern. We talk about this being the W pattern in there, and we said we need to prepare for another potential fake out. And so far we don't have a fake out. I cannot really tell because so far we have higher highs and higher lows in this whole move from the time we completed the previous fake out, at least. And what I said in the video in the morning is if your hands are very itchy and you're willing to take a higher risk for the sake of entering as early as possible in case price starts to rally, if you feel you don't want to be left behind sitting on your hands, you're welcome to take it. But I was very clear, in order to do that in a successful way without digging a hole in your pocket, you have to do it with proper risk management. management, to have an idea of whether you're going to need a stop loss if we come back into the previous range, or if you're going to keep the position open and adapt to that using DCA techniques. If you are a beginner, I mentioned that if I was you, I will stay with my hands empty. If you've been watching my channel for a while, you know that I'm not sitting on my hands, that I have built a position sub 60s, and all those entries have been published on my Twitter, Telegram, and Instagram. So if this has to move higher, I am happy. And if it breaks back below the previous range and we start putting new lows, I will then assess whether I add to my position or if I start looking for an exit, if I start smelling that something is smelling too burnt. So if now you are in a long already and you use the entry from the morning because you're just that sort of degen trader and now you are in profits, I think there's a bunch of points of invalidation where you could consider exiting, which is coming back below 68.8 and closing a candle there on the 4-hour. Second alternative is if we come back and close the RSI back below the previous range. Probably a move this big will mean an excessive loss for the reward, so maybe that's not such a great idea. But I think from today until tomorrow, we should be expecting still lots of moves ups and down, excessive volatility and fake outs. If that's your thing, you are welcome to enjoy the profits from the morning. I made it public that I won't take trades during these moves in the price. I rather taking a swing trade that later I feel confident when I explain what I did and you can learn something from it. Sometimes I take trades where I'm not really proud of, some stuff that I tend to feel guilty, and in some of them I take a win and good for me. But sometimes it's a loss, which is fine. But I tend to not disclose when I just take one of those guilty pleasure trades because really it doesn't teach you much. On the daily time frame and on the delta, we identified this morning that we were very close to daily support on the RSI, and it's natural to expect some sort of bounce from here. And I think the question wasn't necessarily are we going to bounce from here, but the question continues to be are we going to hold after that bounce? Because you can bounce up until 56 and still break down, right? In which case, what is the point of taking the long in here if it's very short-lived and eventually ends up breaking still the support and trapping you? And I guess my expectation is in this area to start seeing a little bit the price action not respecting much some levels and be all over the place like it's been for the past week. So far it is respecting it and it's bouncing. Is it an impulsive bounce with lots of strength and momentum? Not really. You can see that this move in here is very humble compared to this one that is probably 1.5 to 2 times the momentum of this. And on the price action at the moment, we are against the resistance of 70k. So far, we are above 69, which was also resistance before, but we haven't completed the candle of the day to count victory yet. The daily structure looks perfectly well, very healthy. You can confirm that in this ascending channel on the daily RSI. And the open interest in the past 8 months, we are still in the breakout area. And since we expect the open interest to act like a leading indicator in here, for as long as the open interest remains above 21 billion, I kind of feel like we could get away with breaking out like once we did in this area in here, or once we exit this range and we came into the 10 billion mark, which is kind of the ladder approach that the open interest takes during a bull market. Of course, once you enter the bear market, this whole thing wipes a big chunk of it. Entering into the scary part of the video tonight, you can see that today we are seeing a spike in distribution, moving all the way from 0.38 into 0.92, getting very close to a ratio of 1. This indicator, called the Big Well Explorer, uses the ratio between withdrawals and deposits, specifically from big wells, large holders. And I published this on my Telegram, Twitter, and Instagram earlier today, as soon as I saw it, like I always do, but I qualify it as a mild move. It can still have an impact. For example, in here, we have another spike in distribution and the price action took a dip of 5.52%. I'm not saying that this has to be in the same range, but when we compare this amount of distribution with the ones that we have in the all-time high and roughly around here that took dips of over 20%, we cannot really compare all this move from 1 into 2.16 versus this that is moving roughly 0.5. And it's still below the 1 ratio, which is when we have a perfect balance of withdrawals versus deposits. So do I think that this is a nice thing to happen? Absolutely not. I don't like that this is happening right here. But if you look at September in 2023, where we were below the ratio of 1 for quite a while, most of the time, we have some spikes, even some of them that pinch above 1. And that was happening in this area in here, where you can see that even though we are still pumping, there are some signs of distribution in the price action in this area. And anything could have happened, including a complete rollover and then coming back from where we came from, thanks to those distributions in here, but they were not as big. And the FOMO in this area was incredible, led by the newly introduced spot ETFs. And people just continued to buy more until we got into 73.5. So these bullets, we took them, but we compensate with the ETFs. So the question is, how much damage can this cause? And I think it comes down to finding out what's going on. Where is this coming from? And there are two alternatives. This is a genuine distribution in a smaller scale to what we have in the past 8 months, in which case we should be seeing some pullback. And option 2, this is one of those news that came out today about empty GOX that was distributing roughly 2 billion into some new wallets. Some people were discarding this as bearish news and some people were saying that is something that we should be freaking out. The honest answer is, I don't know. And even if I read the full news from a very reputable source, I still will think that they can manipulate us. I just think that we need to keep this as side information that contributes to the whole picture, but not necessarily as an actionable item at this point in time. Long-term holders continue to go sideways and they are starting to roll up, in this case, into accumulating more. Nothing substantial, but it's good to see that they have stopped their distribution. And thanks to the move of the price so far today, getting close to 70k and now roughly around the 69.5, you can see that things have changed from this morning once again, because the RSI weekly is almost about to be above support, which is what we want to see by the end of this week and hopefully pointing up. And the same goes to the stochastic RSI. Hopefully we can prevent any sort of bearish cross. Looking at the scalping liquidity pool, we can see that the heaviest and more concerning area is 65k. 66.8 is also a bit interesting in here. But I think as long as the price remains in here, not breaking below 68.8, which is the area we mentioned before as new support, neither breaking below the previous range formed by this trend line, we longs could get away. We having the luxury of using the W pattern that we mentioned this morning and having more upside. Looking at the swing template on trading different, you can see that 65 is definitely interesting, 61 to 60, and if we zoom out a lot, of course, sub 50s is huge, but once again, nothing compared to what we have just holding above our heads, which at the moment starts from roughly 74k into 77 and then 80 into 82. And a very quick update on this setup using delta from longs shorts using the website Trading Light. I added a link in the description, not just for Trading Light with 15% discount, but also for Trading Different. You can see that every time that we get into this area of excessive shorts, we have seen a bounce. That means that the shorts are being taken out by liquidations, which actually ends up helping the price to push higher. The bottoming process is the red line, but then we look into the breakout. The breakout is when the shorts are being squeezed out of their position and we see a very quick swing up, showing the delta now into green and then having excessive longs once again, and the cycle repeats. The point is, when we break above this trend line, it's not the best entry in terms of catching the lowest low, but it provides some increased reassurance. Like in the previous setup that we actually used, we talk about this retesting Luckily, at that point, we kind of catch one of the best prices to enter, and we just took the swing of 10% to the upside. At the moment, we still don't have that situation. The delta is still a fight between longs and shorts. More shorts want to enter, and because of that, this still doesn't break out to the upside. If that happens tomorrow, I will let you know in my channel as well. Not much has changed since the morning in terms of fair value gaps. We have a fair value gap very small below the price, but apart from that, the rest of the fair value gaps are very far from the price. Price needs to move at the moment 2K to hit the first one at the top, and ignoring the one that is very close to the price needs to move 4.6K down to start hitting the fair value gap located below. That makes 71K.6 an easier graph at the moment, as long as things continue positive when it comes to the election. Remember that there is a perception that if Trump wins, the price should pump. I tend to stay away from that sort of trading style and look more at the charts. Because even though if he wins, there is always the possibility that prior to the announcement, the price rallies and just traps longs and then still crashes or takes a pullback to take out all those early traders that thought that is the smartest thing to do, to enter early and trade the rumor and stay for the news announcement. And at that point, they can still get disappointed. I rather see what the charts are gonna tell us. Since the morning, we took a lot of the delta. Interestingly, on Trading Light, it shows it in the same place, whereas the delta here coming from liquidations, which is a different source of data, it shows that we clear from 340K at some point just to 99K. At the moment, there is 183. These are shorts that are more exposed. So this delta says that from this perspective, price should continue moving higher. Of course, we don't trade this by itself, but we use it in confluence with the rest of the data that we review in the video. And I want to give you an update on the 4 pillars that we always cover that could really help Bitcoin to have a rally in a next leg in this bull market as impulsive as possible and hopefully to the upside. Those 4 pillars are the Global Liquidity Index, the Federal Reserve balance sheet, whether it's QT or QE, and then the dollar index and gold. And we have a couple of good developments that you could consider early indications, some positive signs. We have a new candle in the balance sheet of the Federal Reserve indicating that they continue to buy more, to add to their balance sheet, in other words, to take some steps towards that quantitative easing. We're getting very close, as you can see here, into that resistance. Breaking above that resistance, if it plays out similarly to the resistance that we have in here in 2019, in 2020, with impulsive moves to the upside, meaning that they are adding to their balance sheet like crazy, injecting liquidity into the system, and not just that, but giving an example that they are willing to invest. And they typically do that because they know what to expect from the market. And when they do that, the rest of the market is just mimicking them. And just see by yourself, after this breakout, Bitcoin just had a move of almost 1,000% up, and continuation of the bull market happened right there when they started adding to the balance sheet, having another breakout. And that's why we are monitoring this breakout in here, because that could indicate continuation. And the good news is that we are right there against that resistance, and hopefully in a couple of weeks we are seeing something like this pushing into this channel that I have empty ready there, and hoping that we're gonna fill it with something, in this case cash. Liquidity index is showing some signs that is bouncing, producing a higher low relative to this low in there, and that is right above the new trend line that could become new support. Liquidity in China is also growing in here. So those are all early factors that could help if they end up continuing in this direction. Are they enough like this? I think not. The balance sheet is still in a downtrend. It needs to break that downtrend. It needs to become impulsive to the upside. Global liquidity, same thing. Early indications of a reversal. That's all we have at the moment. So what happens to dollar and gold? Let's look at the dollar index. Around mid-October, we were approaching on the RSI of the dollar this resistance at RSI 58, and we started looking at it, feeling like hopefully that is a rejection and we continue in this move down that started in May 2022. So far, we have been pretty accurate to the damn dollar. You can see that RSI 58 is this line in here using reverse RSI. And we touched it on the 21st of October once, and we saw a rejection, and then once again for a second consecutive week, and after that we are seeing a big red, potentially becoming an engulfing candle relative to this one in there. So from the top of 104.5, we have moved up until 103.3. Hopefully this is going to continue bleeding to the downside, because that is what we need. That is what happened in June 2020, and we have the best move of Bitcoin in this area, as you can see here below. Does it need to happen? Not necessarily. If one of the other pillars contributes a lot, we can have that rally. Of course, what we want is to check 4 boxes, 4 pillars, and get the best rally ever. So if dollar starts collapsing, it should help. If together gold also collapses, yes, more help, more liquidity, more narrative to go into risk-on assets. If the balance sheet of the Fed starts buying like crazy, showing that they are confident in investing in the economy, does that help? Oh yeah, hell yeah. And the global liquidity index, everything helps. Some people in the comments say, well, we don't need the gold, or we don't need the dollar. In some rallies, Bitcoin rallies still. Sure, but more money is more money. That's as simple as that. And looking at gold, at the moment, we don't have a bearish divergence on the weekly. We don't have a breakdown below this yellow trend line. I have notifications for that and I still don't see it. And I'm quite disappointed that after even having so many bearish signals, a fractal from the previous rally into 2020, this beast doesn't want to find a top. It could continue rallying for as long as it wants, but hopefully after this candle pointing up with a wick, we might see the top or we might not. Trying to time tops and bottoms of indexes is really challenging. I do it for fun, but I never bet my life on it. It's just exciting to see some signs of weakness, but we have also seen lots of signs of weakness all the way in this rally, and it just continued to going higher. So when it comes to gold, we can just skip the page and focus on what's going on with dollar and with the rest of the good signs. Guys, thanks so much for watching this video. Remember to have a look to the links in the description. I have the best selection of discounts and bonuses, lowest fees to trade on my 3 favorite exchanges, Bluffing, Bybit, and OKX. Bybit and OKX are top-notch exchanges with a huge arsenal of tools, derivatives, offering grid bots and different signal bots, everything that you ever dream of using. But they do need KYC to open an account. Bluffing is a hassle-free exchange. You get a huge bonus if you consider using the links in the description. And the advantage is it doesn't need KYC, neither a VPN. It takes 5 minutes to open the account, get it funded, and start trading with leverage anywhere you live in the world. Thanks for watching. I'll see you in the next one. Bye bye.